Our next guest predicting this year we will see concrete steps with names like Microsoft to benefit from the advances. Let's bring in Brent Thill, Jefferies senior analyst, to discuss where investors should be looking. Brent, always a pleasure to grab some time with you and get your insights. Take us into the thesis here, and it's really going to come on what may be the pricing mechanism here and come down to the pricing that for some of these solutions companies like Microsoft are putting into the market.
Yeah, AI was a hype year in 23. 24 will be a start of the implementation, and 25 will really be the revenue year. So we still have a ways to go for software. So if you look at companies like NVIDIA, Dell, all the hardware infrastructure, right, all the attention's there because all these companies that are putting AI in are having to put that critical infrastructure in now, right? The software companies are all buying those companies to enable their services, but those services in most parts aren't even live yet today. And they're in what we call POC, or proof of concept. So companies are trialing them, but they won't go live until later in 24. So the way to play AI right now, in our opinion, is, our clients are continuing to be long the hardware and semi names, NVIDIA, AMD, Dell. And then as we get to later in the year, there's going to be a switch over, we believe, more to software, because these software services will go live on top of that hardware. And so, if you've seen the SMH, which is the semi index, has absolutely ripped year to date, and the IGV, which is the software index, has massively underperformed. As many of our clients say, the IGV stands for I give up. Why don't I just own the semi index? So right now, we look at companies like Microsoft, Amazon, Google, in really good shape. And there are three characteristics for AI to work. You have to have data, you have to have users, and you have to have a lot of money. I mean, there's chatter that Microsoft's putting a $100 billion new data center in. Who knows if that number's right? Even if it was wrong by 50%, you're talking about a $50 billion data center. These are not, you can't do this if you're a startup. And this is why all these AI startups are starting to find partners. OpenAI with Microsoft, Anthropic with Amazon and Google, Cohere with Oracle. You're seeing alignments, and those alignments are coming together. They're building the software, and that, again, will be a bigger year for software and internet for AI in 2025 than 24. We'll start to see the ramp of these proof of concepts go into production, most likely in the back half of this year again, but they're going to be baby implementations, little AI projects here and there, right? So we're not going to see mass market for a while because companies are still struggling with data governance, and is AI going to go wrong, and is the intern going to try to query the payroll data for the employee base, all the things that you worry about. And so you have to be very careful. So it's going to start private, it's going to start small, and it's going to build over time. And so the enterprise plays that we like would be Microsoft and Amazon, and the consumer plays we like would be Meta and Google.
Brent, when it comes to the Microsoft and Google comparison, obviously very different business models, obviously very different points here just in terms of AI adoption. Microsoft, like you're saying, largely viewed as the winner, at least at this stage, with AI adoption. Some of that fear, though, it sounds like maybe you think is a bit overblown, pointing back to the fact that a lot of people love to make the case that Google is far behind Microsoft when it comes to AI adoption. Is that simply not the case?
I think Google... the fear on Google right now is I think they've done a poor job of communicating what they have. And I think they have more, underneath the hood of the car. And so what I mean is when Microsoft started this AI revolution last year, right? They are the first ones, at least in software, that came out, early last year and said, this is the age of AI. And I think they caught Amazon and Google flat-footed. And then next thing you know, Google's trying to race up, and they're coming from behind, and they're effectively trying to demonstrate what Bard was, or trying to show a number of these other technologies, and they did a poor job. And most of these demos kind of fell down. So we think that ultimately, again, there's more technology. I don't think it's all quite ready to go for prime time, as we've been talking about. None of these large enterprises are stampeding into AI yet, despite what you read. And so Google has time, but they have to get their act together. They have to get their demos together. They have to get effectively alignment. Look, this is not anything that any of our institutional investors don't know, but Google's been a really difficult company as investors to deal with. They basically say, hey, look, we don't care what you think. We can't really talk to you. We're going to build it. If you don't like it, we don't care, right? That's not the attitude that Amazon, Microsoft, and Meta take. And so they need to improve their communication with their investors. They need to improve their communication of their AI products, because there's been some pretty loud cries about that they need to do a better job, and we agree with that. And they can do it. So if they put these simple things together, their multiple can go higher without doing anything new. And then they need to execute on AI. We think, again, a lot of these tools are there. We think that ultimately a lot of these chatbots may be integrated into Google search. Even if you're in a different system, you may ask a question of a chatbot. It may actually be using Google data. And so I think there's an opportunity to combine search and AI together. And in Google, we think, again, has already demonstrated AI for many, many years across many of their products. And I don't think investors are really digging deep to see what they've already built. It gives them a great platform to go from going forward.
Brent, as we continue to hear about NVIDIA perhaps being the de facto generative AI chip company or portfolio play, is there an unsung hero that's out there that you may be tracking at this juncture that investors might be missing at this point as we're kind of scaling up the broader generative AI uses, the cases, and the number of people that will actually have some type of product or service that they're able to see a difference in their daily life? And what is that company from your perspective?
Well, I mean, I think there are a bunch of large and mid-cap names. Salesforce.com doesn't get a lot of attention in AI. They're kind of late, but they're going to play catch up and be in a really good spot. Adobe is the crowd. Everyone hates the stock right now. I think Adobe has more AI than people give them credit. The minute that OpenAI Sora video came out, everyone said Adobe's dead. And this reminds me when Steve Jobs was alive and he used a bashing Adobe Flash, and everyone thought Adobe was dead, and they weren't. The stock was 30 and it went to 600. So Adobe is another name that we like in SMID cap. Elastic, ESTC. Their foundation is they're like the Google search for the enterprise, and underpinning AI is search. And so Elastic, we think, is a great company to benefit in our opinion. So we're actually a big fan of what's happening at Elastic.
Brent Thill, Jefferies senior analyst. Brent, thanks again for taking the time here today. Appreciate it.
Thanks, guys.